Guys, welcome back. Today we're going to be discussing the Q4 result update of two companies, the Anup Engineering and Ksolves, right? So first, let us start with Anup Engineering. So Anup Engineering, as you all know, makes these huge heat exchangers and the vessels that goes on, to be used in the petrochemical industries and heavy manufacturing industries, right? And over the quarter, we've seen like the company has been performing really well. Like whatever the management used to come and tell in Concall, you will see the execution happening in the next quarter, right? And that is how it has been, and of course the market also has rewarded it, I would say, generously, right? But right now you will see the last quarter, agar hum baat karte Q3 ke bare mein, we saw that the pace of growth fell down, right? We saw usually the company which used to be a 25 to 30% ka growth engine which was there, and also the management always guided for a 25 to 30% ka growth while maintaining the 22% ka margins, right? So we saw that ke like ek baar Q3 mein 12% ka growth hi tha. Now one of the reasons for Q3 mein 12% ka growth was because the raw materials that are needed to build these heat exchangers and everything. So if the company only gets the raw materials and if they construct it, what happens is they get a huge top line, and margins also becomes very accretive. But one of the orders was such where the client gave you the raw materials and all you had to do was assemble everything and give it back to the client. As a result, because of this, we saw that the top line growth was 12%. But coming to Q4 right now, we see in Q4 also the top line has not really much improved. Agar aap year on year pe dekhte ho, matlab if you look at Q4 versus this Q4 versus last Q4, you see that the top line growth has been hardly 8%. I mean, the company got to 25 to 30% and 8% growth. It is not really the best, I would say, right? And of course, operating leverage has been very huge over here, because if you look at the operating leverage, like the PAT growth has been like, I would say, I think it's around 121%, something in that range. But that is because they have this one-time tax reversal, right? They've gained one-time tax because of that. But if you take into account without the tax reversal, even then you will see the PAT jo hai, that has grown around 40%. So overall there's a huge operating leverage, but the top line growth, just a single digit top line growth this quarter is a bit of a concern, because it's the second quarter where you're seeing consistently the pace of growth fall. And we only have to like listen from the management as to what is the issue. Could it have been the Red Sea crisis? But I also don't think that can be an issue, because last time jo bola tha, like in terms of when this issue was highlighted in Q3 ka con call, the management had told ki like we do not foresee any issues because of that, because the one issue that we see regarding the Red Sea crisis is the raw material or getting the raw material. But whatever the raw material we need for the next 3 months, we are set. So do not look. And also right now, if you see, like over this year, they had guided to have the export ka book to take to up to around 30%. We already saw that happen in the first half itself. So who knows, maybe because of the export is also right now 30% of the book, we are seeing just a single digit growth. So a lot of questions that I think it's there for the management to answer here. But on the other hand, if you look the balance sheet, the cash flows, they are very strong right now. There is nothing to complain about here. But having said that, the single digit top line growth, the pace of growth falling down consistently for 2 quarters right now becomes a huge part of concern for Anup Engineering. Okay. Now the second company that we are going to be covering is Ksolves. So Ksolves, if you look at the business model, right, it is an IT-based company which does a lot of service. They do not have a product of their own, but they're a service-based industry. So they have partnership with a lot of companies back in the US, such as Amazon Workforce, Odoo, Salesforce, etc. And these people provide the solutions for any company that is here. Okay, and even when you talk about their clients, they're not concentrated particularly, let's say, in one geographical location. They cater to somewhere in North America, to Europe. They are pretty diversified with regarding their clients also. Now, majority of their revenue that is there, around I would say 97% of their revenue is coming from services, right? Providing these services. Around 3% comes by having their own product offerings. Now, when you talk about product offerings over here, they have their own products such as performance testing. Now, what is this performance testing? Let's say you have a website or an app, okay, and you want to check what is the load this website or an app can take. Basically load in the sense like how much traffic can it bear at a given period of time. So all of these things they do, right? And they provide a wide variety of services, and that is the business model basically, like in general. Okay. Now, one thing you will see here is with Ksolves, I think a lot of you all could have played this probably the last 2 quarters or anything, you saw this stock which was there, it doubled literally, like whoosh, right? Like it became 2x probably in like in less than 6 months, right? And now there was a reason for that also, of course, like good growth, everything, like whatever the recipes that is there, I'll cover it over here, like that is needed for a stock to be multi-bagger, it had. Now let's come to Q4 that is there currently, right? In Q4, if you see, we see that the top line that is there, it is at it's grown at around how much? It's grown at 35%, right? And if you look at Q3 ka con call, Q3 ka con call mein Ksolves ka management had come and told, see, we're targeting around 34% ka growth. That is our benchmark. So they are at par with the guidance, you can tell, right? Even if you look at the QOQ basis, the top line has grown by around 7.8%. Okay. Now comes to the bottom line. There is, all this while you saw a huge amount of operating leverage come into play with Ksolves. Now that you see that operating leverage is a bit missing. Like you'll see, although I know it is not a huge miss, but if you see on a year-on-year basis, PAT jo hai, has grown by 33%, right? And similarly, on a QOQ basis, it has grown by 8.3%. So now there is a bit of miss in terms of operating leverage in this quarter. Okay. But overall, I would say like at least the top line growth is there. So great, right? I mean, at least they are able to perform, like whatever the guidance is there, it is given. Now, one thing I will say is like what usually happens, I will cover this. There is this bias usually that I have observed with retail investors. They usually see a stock go 2x, 3x, whatever x it is, okay? And they would have missed that train, right? They might have not caught the opportunity at the right time or anything. Now, what happens? Probably the stock becomes available, right? Like probably it is not running as it used to be. It is stuck at a range, and they go on to buy that. They never ask a question, like, is this stock, like maybe after whatever the run has happened right now, is it still having the same opportunities, like like how it made money? Does a growth prospect, does a money making prospect here remains the same as it used to be back then? I think this is one of the questions you have to ask every quarter if you continue to hold the business or if you continue to add a new business in a portfolio, right? Is this opportunity, is this business opportunity, like accretive for me? That is one thing. Now when you go back and look at Ksolves, right, like if you go back and look the entire journey, I would say between 2023, like I would say from March to August, when the whole earnings momentum for it really started to build up, you will see there were many things that went right for the business. One, it was a very small market cap, right? I would say it was, I think at that time, less than 1000 crore. The market cap was, I think, around 600 crore ka business tha, market cap tha. ठीक है. Now market cap छोटा था. On top of that is, see, of course, इतना छोटे सा business है, तो base तो इतना छोटा ही होगा ना. In this small base, of course, they were able to get the 60% co growth, 70% co growth. I think there was also one time where the sales was literally like doubled, right? So one extreme high pace of top line growth था, combined with operating leverage. IT company है तो ROE तो, because cash तो भर भर के होगा यहाँ पे. ROE भी was very ढंग का. I think it was north of 20% also over here. So all of these things, and it was available at a very very low PE also. Like if you see, I think I would say in that time when the earnings momentum started to become better, you got a 60% growth engine at hardly 20 p, right? I think 20 to 21 p. That is where the stock was, right? It was like big discount you got, right? So all of these things went right. So there was growth, there was operating leverage, high ROE, high growth plus high ROE is, that is the kind of business you would need in your portfolio. And combined with that, you had a very low PE. So there was a PE re-rating. आपको EPS का expansion भी मिला, PE का re-rating भी मिला. As a result, the stock became 2x. Now coming back, the last 2 quarters, we see that the pace of growth has fallen down for the business, right? It is no longer that 60% growth engine. It is now a 30% growth engine. So that is number one that you see here. The second thing that you see here is going forward, that PE re-rating ko hona, it will be very tough. Probably we will have that EPS expansion going forward, but the PE re-rating will not be possible. I mean, I wouldn't say it will not be possible, but at that rate, it might not happen. I'll just show you the PE chart. So I think it will make sense for what I'm trying to explain. I'll just share my screen, just a second. Oh. Yeah, I think is this, yeah, my screen is seen now. See, first of all, can you see here the pace of growth that you see, right? Once, can you see how the pace of growth started to come down for the business? But here, this was the time, can you see here, like a 60% growth engine, you were getting at this 20 to 30 p. Now, if I go, like, I'm just going to show you this peak chart. See, this was where the stock doubled, right? Literally March to somewhere in August, it literally peaked. Look at the PE over here. The PE literally went from 24 to 50. The P तो double हुआ literally literally 2x PE became. So when there was a PE rating happening and the EPS expansion, now you see why the stock became. Now coming back here, can you see ultimately now as a result? I keep telling you, right? Pace of growth, pace of growth, pace of growth ghat gaya. So this is what I was trying to tell you. Like pace of growth ghata, and the PE is also right now high. Now we are paying how much? 60 PE, I think. Yeah, around 42 p for like a 30-35% growth engine. See, one thing here, the only thing that remains, I would say, lucrative here in this business opportunities, the market cap is still very, very small. It is still 1500 crores, and you're getting 1500 crores by 30% growth engine. But one thing investors have to get here, get right is their expectations. Just rate say wo 2x one or 6 months may, at that same rate, you might not get that another 2x in 6 months. Probably right now, the time taking, for the journey for the stock right now from wherever it is to become 2x, the time it will take to reach that, it will be a bit longer. The time frame I'm talking about, that will be a bit longer. Because why? Again, reiterating on the same point, the pace of growth has come down for the business, and the PE re-rating from here will become tougher, right? And now plus on top of that, we are seeing a lack of operating leverage also. So that is the problem with the, I wouldn't say problem, but I would say the opportunity is not as lucrative as it used to be at least 6 months ago. But still, it is a very small company, so I would say it is much better. It has a lot more opportunities to grow than the current IT companies that are there. I would say in IT companies, if you have to look for, I would say the only possible prospects right now that is there is Ksolves, there is NewGen, there is KPIT. Uh, Not KPIT also, again the same problem with KPIT right now. I added there's another one, I think CMS, but CMS ka result abhi tak nahi aaya hai. But overall, this is a basket, I would say, compared to the giants of like TCS, Infi, and Persistence also, for that matter, right? Now, coming back, the last thing I would like to highlight here is the balance sheet and cash flows again. Anup Engineering, I'll cover the balance sheet and cash flows in detail. Like I will share the balance sheet here on the screen, and I will explain you every line item when the con call is done. I think that time it would be better, because now we do not have any information with Anup Engineering as to like why that single digit growth aaya hai. What is the issue? Now coming back right now to Ksolves, here again balance sheet is thagda, like absolutely no problem. And of course, right, IT company hai. IT company ka inventory kya hai? Nothing, right? So they have absolutely no inventory. So they are very cash rich business here. There is no asset liability mismatch. Cash flows bhi bahut tagda hai. There has been an investment like plant, property, and equipment. I think it is because they probably have moved into a new office, or gone into a bigger space, maybe because of that. Because you can see their employee benefit expense, which is there, that has increased. I would say from 101 to I think 124 crores. I think in that range it has gone. So that is the only thing. But overall, good business. But something to be, I would say, something to be a bit. Uh, what's the right word? But I think get your expectations right now with the business. That is the only thing I would like to highlight with Ksolves. But overall, I would say okay, good set of decent set of numbers, I would say. So Anup Engineering, I wouldn't call it decent, but I think again there is lack of clarity as to why there is an 8% growth. Other than that, all great. So in the next call we will no, sorry, not call, what is wrong with me, in the next video we will cover, I would say, if Bharat Wire ka con call is out, I think I will do that along with Usha Martin. I will cover both the companies together and do a P2P analysis. I think that would be much better. So we will try to do that. So that's that for today. See you again in the next video. Until then, take care. Bye bye.